In this video, I want to go over one of my favorite strategies, which is trading the island gap reversal. Now, the problem I always have with this strategy is actually finding the island gap to begin with. I haven't found a good scan or a good way to find them other than each day searching for gaps. And then when you see a gap identified, look back to see if it's part of an island gap reversal. What I have on the chart here, on the screen here, is a chart of Micron technology. And it's an example of an island gap technology. And this is a pretty good one. Ideally, I've got it circled. Ideally, you want to have a gap up, which here you actually had two gaps up. And you want it to trade above the gap up, which is in this area here. And you see all the price consolidation and all the price action in this area. And then you want to have a gap down. And your entry is when it gaps down. Now, in this particular one, if I found it early in the morning, I probably would have taken this trade. To me, I would not have taken it end of day where it gapped down this much. It's just, it's too far away from the areas I normally try to trade, which are in some of these indicator areas that I have set up here. In fact, I'm going to switch to another one of my charts that might give you a little better example of that. This is actually my EMA wave indicator. If you want to know how to set these up, it's in the description below. It will show you the videos on how to set these up. And if you see, right in this area is a little bit away from this area I want to trade. However, when you're doing an island gap reversal or any type of gap strategy, you're going to have to ignore some of your normal trading rules, especially on this one. You know, I typically try to trade within these areas of the wave. You're going to have to ignore that on these type of gap plays. But I don't want to get way away from it. Like right here, if I'd entered in this area, yes, it went my way for a little while, but it did eventually reverse, which is what I would expect, because this white line here is a two ATR move on the Bollinger away from the mean. So you've got a lot of pull down in the price, and you can see even our RSI starting to head down, fairly far here. So you know if you're getting in here, your chance of reversal is a lot higher. If you could have gotten this trade at the beginning of the day right here, this is a good move down, and you just have to determine where you want your stop to be. And personally, I probably would have closed it right here on this candle, because it looks like it's a pretty strong reversal candle and moving back up into the wave. So I probably would have closed here if I'd shorted in this area. If you'd made the mistake of shorting here, then you might have got out at break even if you waited for this candle. So, like I said, this is a perfect example of a island gap reversal. Let's pull up another chart. Here's another example. This one's not quite as clear. You've got a gap up right here on Bank of America. You've got some consolidation. Technically you've got another gap here, and it trades down to get a gap down right here. This, like I said, because you had this trading down into this area and you had another gap here, I don't really like the structure of this island gap reversal for the island gap reversal strategy. Yes, when it gapped down into here, if you got into it early in the day, you probably could have taken it and your stop would have been right in this area, and it would have been a good trade. It's just the structure of the gap is not as good as I typically would like to see in these, even though it did work in the end. You're also getting, again, on the gaps, you've got to ignore some of the ATR ranges just because of the gap. But I wouldn't have wanted to enter here. I certainly would not have entered here. So I would have had to got in right at that gap in order to stay in this trade, because my initial stop would have probably been right here. Somewhere either here or here, and then I would have moved the stop down to here as it traded, and then right here I probably would have looked strongly at getting out. I certainly would have gotten out right here if I had been in this trade on an island gap reversal. Let's take a look at another one. This is the U.S. Oil Fund, and this is a very small island gap reversal, but I actually like it pretty well, because you had gapped up over this 2 ATR range and you gap back down here. Again, I would have wanted to get the entry on this one right in this area, so early on in the day. You might have been able to enter the following day on this candle, because your stop initially would have been here, and then I would have moved the stop down to here after the close of the first day, and you can see you got pretty good price action down. You had a decision to make right here. Do you want to close, or do you think the trend is down? And if you notice, your wave is starting down right here. It would have been, what I probably would have done is move my stop down further into this area, and on the close, that is, move the stop down, and as long as the following day it didn't exceed this, then I probably would have moved my stop back up into here. This candle with this gap up, I would have paid real close attention. I know it was a gap up because it's a red candle and the high's up here. So I know it gapped up this day, but that's a real strong move down. So would I move my stop down to here? Possibly, which would have got me out here for very little profit. If I had been a little more patient, I would have realized, I could have realized that this wave is moving down, and just done everything I could to stay in the trade, probably somewhere right here. And I've been tempted to get out on this candle. That's a pretty strong down move, and you're moved at 2 ATR range, so this would have been a real good exit. Certainly anywhere, certainly right here on this one would have been a good exit, and if not that one, this one would have been a perfect exit for me on these trades. But if you also notice, and I actually just noticed this as I was doing this video, you have another island gap reversal right here. So you had a gap down, and then it gapped up for an up move. So, as before, right here would have been a good entry point into this trade as it reversed back up. And I would have probably followed the stops up. Right in here, I would have really tightened up my stops because there's a lot of downward pressure here, and it looks like it's really set up for a move down. This certainly would have been an exit point for me if I hadn't gotten out, with a stop right here. I would not probably have held past this candle just because the previous move down that we had here. I probably would have been very reluctant to try to hold this on the long side. If I got out here, I probably would have lost a little money. Like I said, I didn't actually do this trade. I'm just giving examples of what I would have done had I seen it in all probability. So I would have either got out here or I would have got out here for a small loss on this one. But this was another island gap reversal that I didn't see when I initially looked through this chart. So this would have been a good move to the upside. Let's take a look at another one. We have another island gap reversal here again to the upside on Apple. You had a gap down right here, but as you can see, you never had a gap up. You had another gap down, and then you had another gap down. So this was your first gap up, and that right there is actually a perfect entry point if you wanted to go long. And then you really could have rode this wave up, probably to this candle maybe, or perhaps this candle. This would have been a good trade for you. Now you had earnings here, so probably actually I would have gotten out right in this area before earnings. So this ended up being a very good gap up, a reversal to the upside. So that was a good trade if you had seen it, and it's another good example of island gap reversal. Let's take a look at another trade. I highlighted this one. This one is kind of hard to see, and it really, in my opinion, doesn't meet the true definition of an island gap reversal. You've got a gap up here, you've got some consolidating price action, you got to have a gap down here. Now it turns out this trade, it would have, if you'd taken it anywhere in this area, would have worked out fairly well because you would have gotten out on this candle, or maybe a break even on this candle. The problem with this one, as far as an island gap reversal goes, is it traded within the gap right here and right here. I don't typically trade those as an island gap reversal because I really want to see price action. If I'm looking for a reverse down, I want to see price action that it gapped up, traded and consolidated without filling the gap, and then gapped back down. Or on the going for the upside, it had gapped down, traded or consolidated, and then gapped up without filling the gap. Once you start filling this gap, this trade gets a little more convoluted and a little more confusing. It's not quite as clear. Pull another one. This is the same thing, where you've got a gap up, you've got price consolidation, but again, you filled the gap almost immediately. And you did get a gap down that you could have taken, and you could have ridden it down, but to me, even though you've got the gaps, when we talk about a true island gap reversal, because this gap filled during regular trading or consolidation, that's not actually, in my opinion, an island gap reversal. The same with this one. You know, it gapped up, you got consolidation, you got a little gap down here. So I guess you could argue that right here was your entry point for a true island gap reversal. But really, I'd rather see the gap trade down more, at least closer to a gap fill or closer to that initial gap up. You know, if you call this your gap down, you did eventually get moves down, but it would have been real hard to stay in this trade with this candle for me. You know, if you believe in the signal, you would probably kept your stop higher and stayed in it. But I would have had trouble staying in through this candle. And again, because the price action traded through the gap and filled it, I don't really think that's a true island gap reversal. Take a look at one more. Right here, it's the same type trade. You had a gap up, but the gap filled right here. And the gap filled right here before you got your gap down. I would not trade this as an island gap reversal just because of that gap fill. You know, I'd rather see the cleaner trades like we had in the beginning, where you got a gap up above current price action, which is here, consolidation, and then a gap down somewhere within the initial gap up area. To me, this is an actual island gap reversal, because this is an island that is above, or it could be below the current price action, and it never filled. Yeah, I think that is the true island gap reversal strategy that I trade and prefer to trade. I'm not going to say that I don't trade the others. Sometimes I do, but they don't really make the true definition and rules of an island gap reversal. So you have to be very careful with that. Overall, like I said, I like this strategy. I don't trade it a lot simply because I have trouble finding them, you know, at the entry point, because I would want to enter this early in the morning. So that means I would have had to do a gap scan first thing in the morning, and then I would have had to gotten to this trade, because there's quite a few gaps every day. So I would have gotten to this trade. I would have had to recognized it, and I would have had to get into this price action. So I don't trade them as often as I would like to, but because even though they're very good strategies, just because they're hard to find. And then you also struggle sometimes to find the right exit points on them. You know, as far as profit target, you know, stops are pretty simple. Your initial stop would probably be up at the gap area, which on this would be a pretty big one. If you took this trade, you'd have to have probably stop somewhere in this area, or you could use some other indicator as a stop. After the first day, you could use the first candle as your stop point and try to make sure you at least break even. And then I tend to look at how far away we're getting from the main through these ATR bands, and I also look at candle action. You know, this candle was the first candle that would have indicated to me that I needed to get out of this trade. And this would have been the second one that said, okay, you've got to get out of this trade. Had I held to this candle, then I would have stayed in longer, and I probably would not have got out until this gap up right here. That would have gotten me out of the trade. But in all probability, I would have exited here or here. Let's take a look at this on another one of my charts. Let's see. You know, this is my Bollinger Band strategy. Again, if you need to know how to set these up, then there's descriptions below that you can look at. And the first thing you'll notice is this gap down. This is a 1 ATR band, this is a 2 ATR band, and this is a 3 ATR band. So we hit the 3 ATR band, which is screaming a reversal back to mean or a move back up. On a gap strategy, sometimes you can ignore this for a day or two, but eventually this will come into play. You know, and right in here, this is where I'm still at my 2 ATR, even here. That's why I said I would have probably closed here, because I've gotten back up to, you know, this area. You know, I would have strongly reconsidered an entry here, because I've got to move down, and it's back up to the 1 ATR band. I'd rather see it to the mean, but it's at the 1 ATR band, and I've got a I've got a candle that's telling me it's looking like a down move. So I would have considered a re-entry right here had I been out, and then I would have gotten stopped out on this gap up. Probably would have even thought about an entry in this area again with this move down, and would have got stopped out. Probably here. If not here, then I would have got stopped out on this gap up. But you can see how you can use the different indicators and different charts to get an idea of what you expect the security to do. And you need to take all the charts into consideration. You know, as on any strategy, I said, here's the Bollinger Band. This is my EMA wave. You know, and I can get an idea of what price action is, and also keep RSI here. And then finally, my stacked EMAs, which I typically use just for trend identification and price levels. So you take all that in consideration and you look at your gap strategy, in this case an island gap reversal, make your trades, set your targets, and good luck. If you have any questions or comments, let me know. Please like this video. Please subscribe to the channel. If there are any other videos you'd like to see me make, let me know that, and I will get on it. Thanks.